Hello and welcome to the live trading hour, which is brought to you by the Live Trade Room, where we'll be looking for high probability trading opportunities across some of the world's largest markets, not just from foreign exchange, but also markets like your commodity markets like gold and oil, and also the global indices as well. We generally look for the better opportunities across multi-asset class, so we're not just focusing on one asset class. We do want to see where the capital is moving to in these markets, and then we're able to trade them accordingly. Okay, so just before we begin, if we could just start with our risk warning. Of course, please take note of the risks involved in trading the financial markets, and be mindful of those risks at all times. Without risk, there's no opportunity for return, so it is a trade-off with one versus the other. Okay, some interesting market conditions now today. Obviously, it's the first day of the trading month, so and apologies for our delayed start today as well. There's been a lot going on in the background, so apologies for that. Good afternoon, Finbar. I hope you're well. So on the news front, the major news really for today just pretty much revolves around OPEC and the potential for OPEC to increase supply, inject more supply into the market. It's expected around 50 million barrels per day injection into the market. They do perceive, or certainly the rhetoric in the build up to this meeting does perceive that there is the demand for that increase in supply. So we're in that sort of tapering the restrictions that they've been put in place for quite some time. We're now beginning to taper those restrictions, inject more oil into the markets, as they believe, as these economies are now coming back online, that there is the demand to meet that supply. In addition, at 1:30, in about sort of 30 minutes, we have unemployment claims number. So we'll be interested to see what the picture is as we approach non-farm payroll tomorrow. And there's a manufacturing number expected to be quite positive in the US. So that's just a very brief breakdown. So if we do decide to get into some oil trades today, we just got to be mindful that we don't quite know what the decisions that are going to be made. We don't quite know what they are just yet. So it's worth noting that we still may see some very considerable volatility as the day unfolds. So therein lies the difficulties with trading oil. But we will have a look at it now in just a second. Just a quick reference towards longer term bond yields, which are a good indication for central bank monetary policy decisions in terms of tapering their quantitative easing program, and also potentially increasing interest rates. So we're pretty steady around this 146, 147 level, as you can see over the last few days. A slight bias to the downside maybe, but we're broadly speaking, we're drifting sideways as far as the longer term bond yields are concerned. So that just creates a bit of opportunity for stock markets to the upside, or let's say it's supportive of more bullish stock markets. So let's see how that translates to these markets, because unfortunately, right, today is the first day of the trading month, so we do have some. It wouldn't be that surprising to see some indecision, really, as we start the month. So I'm just getting rid of a few of these. We don't quite need so many. We are technical traders, so we do want to see what's going on in these markets, see what's happening to price action. So really, last night's trade plan session, we had a look through these markets, and we were actually looking for some dollar strength to continue. Really, it's continuing its downward spiral, and we've kind of got a mixed bag as far as the dollar is concerned. And that is rubber stamped really by the sort of the mixed sort of sideways moving lack of volatility in markets like the S&P 500. So we are seeing higher highs, so we are seeing prices push higher, but they're doing so without very much volatility. Look at if I just show you this on a bigger screen, look at something like the 20 ATR. It's just showing where the volatility has gone in the last sort of month or two. It's really fallen off a cliff. So now we're looking at sort of a range of 33 points over the last 20 days. So over the last month of trading, although the direction of those moves has, as you can see, been to the upside, but albeit with very, very low liquidity. So really our trade plan was looking for extension to the downside as far as the dollar is concerned, with the euro pound to the downside, the pound dollar to the downside, and a few of the other dollar pairs. And as you can see, we've kind of got a mixed bag so far. So we were looking like we were going to get some extended moves in markets like the pound dollar to the downside, and we very sort of quickly reversed off those lows. The big news, or the big market mover of the day so far, without a shadow of a doubt, has been in the oil markets. But this is preemptive price action. So this is price action that we're seeing, bearing in mind we don't have any major news out just yet. So we don't quite know what the decisions have been. So let's look at it on the hourly time frame. So we've really, over the last sort of 3 hours, we've just seen a pretty comprehensive break to the upside as far as crude oil is concerned. So in terms of, how would we trade it and what would we look to do, unfortunately we actually need quite a decent pullback, maybe back to 74.17, and we'll look to take the next leg to the upside, because as it continues to make higher highs, it becomes less and less a high probability trade, and it's fine for those that are looking to invest or looking to trade over the longer term, because what you'd be doing is you'd be anticipating actually that the price of crude oil will be above the $75 level. But when you're trading $2-3, maybe a $4 gain, you can easily get a $2 pullback in this market, and that would give us actually an opportunity to get into it to the upside. So it's obviously tough, and it's not great to be watching this continue to make new highs, but you do need that opportunity to get into it. And there's an opportunity sort of further back, really, if you were sort of tracking oil and you were monitoring the opportunity, but we've had just a significant amount of positivity in this market over the last 2 hours. So let's see how the US traders feel about this market. You would certainly look at it, and in the first 10 minutes of the open, it's looking really quite positive. So further upside for crude oil, very likely, and that seems to be the big news of the day. Apart from that, our other opportunities really revolved around, you could be right, the 74-75 level. Let's have a quick look at that, actually. 74-75. Yeah. If I just get up my pen, I'll share with you kind of our thoughts really on the trade. So we want to try and assess, the probability of a successful outcome, and although prices are continuing to push higher, so that's kind of roughly the level that we would. You see, we're working really hard for a pullback to this price. So I understand why you're picking that particular level for a pullback, but we want to try and avoid working too hard for these levels of support and resistance. So for us, the natural level is actually back at the 74.17 level. It would need to travel some way, but that can happen very, very quickly in a market like crude oil. It's just looking like it's just rocketing to the upside, but it will pull back at some point. And if you look at it on the bigger time frames, it just makes it a little bit easier to predetermine these levels. So the 74.17 would be, if we get that opportunity, would be the opportunity to get in on the pullback. It doesn't represent a high probability trade up at these highs, unless you are looking to trade it longer term, which is, what obviously some traders is what they look to do. So really, it's kind of a bullish engulfing, not quite technically an engulfing candlestick, but certainly very, very bullish, and further upside expected. But we're looking for like a $1 pullback really on the trade. But that's really the only market. And another thing we just want to draw your attention to is the monthly time frames. So today is the first day of not just the month, it's the first day of the quarter, and it's the first day of the second half of the year as well. So as you can see, last month we had some really strong selling in markets like the euro dollar, and actually some strength in the dollar across the board. What we would look to trade, and what we would prefer to trade, is further selling. So it wouldn't be on the realms of possibility eventually to get another sort of month of weaker price action in these markets. So that's what could be looking to trade. Now the dollar itself has, there's a lot of those that are kind of talking up dollar weakness. We're just not really seeing a case for that, certainly on the bigger time frames. So will we get this continuation trade? That's what we're looking for. That's the trade that we're looking to get into. Right now we're currently just bouncing off the lows, but what that will do is create, if it does flush lower, it'll create a bit of a wick to the upside, like we saw pretty much at the beginning of last month. You get prices that are threatening to push higher, and then they subsequently rolled over, and that's actually what we're looking for again, is that rollover trade to the downside. Will we get it? We'll have to wait and see, of course. From a daily time frame perspective, a close below the 1847 is our high probability sell trade. It will be the flush trade to the downside. I'm just looking at a few of these other markets on other screens, and we've got that same analysis across most of these pairs. So we like the pound dollar below the monthly low, below this little low just down here. We don't really have that opportunity just yet. The dollar yen is continuing to the upside, so we're definitely seeing we've got strange market conditions, and I'll explain why. The S&P is at all-time highs, so we're kind of in this mildly risk-on market condition, but we're also seeing capital move towards the dollar as well, largely off the back of some quite positive ADP numbers and a booming economy really, with further upside. Now there's concerns in the pipeline as well with regards to inflation and how central banks are going to taper their bond buying, and potentially at some point we know there's going to be 2 rate increases between now and at the end of 2023. So all of these, the markets are digesting, and where we're seeing the capital move towards, broadly speaking, over the last few weeks is in the dollar, mildly in the yen, and we're seeing all-time highs in the stock markets. So just to clarify, that's a counterintuitive position. That's not a correlated market move. So we'll trade with caution, basically, is kind of where we're at with this. So looking across at the other dollar pairs, we're seeing sort of strong rejections of these more recent highs. Again, it's the first day of the trading month. We're getting some dollar weakness begin to creep in as we start the month. Now, could this be if I just if we go back to the euro dollar, it's the most traded market in the world. If we look at this pound, the euro dollar monthly time frame, we want to keep our analysis open, because could we see if I just get this, could we actually see another strong reversal of this price action, where it's looking really quite positive? Absolutely. All your buyers, this market's moving from bottom left to top right, so we're in this little uptrend. That remains the case even at these lows. So will we get bullish price action and some dollar weakness? It's a very good question to ask. The answer we don't really know yet, because if we start seeing markets fail to make new lows and then reverse, then the answer would be yes, we can now look for euro dollar buy trades in this market to the upside, ideally probably above the 120 level. But for now, all we're doing is we've made a new low and we're just pulling back slightly. So will we get the flush trade? That's what we're focusing on right now. We don't really have more information to deal with just yet. So again, we like the pound dollar to the downside for now. The dollar yen to the upside, we've got like a 3-day high just to 3 out of the last 2, 4, 6 days, we got the highs up here at the 111.12, so that breakout trade. We've got today now, we've got kind of strong reversal, and we've just got a mixed picture with this dollar. We're actually seeing some weakness creep in across the board. Just remains to be seen how substantial this weakness is right now. We don't really have enough information just yet. That's the bigger problem. The up and down continues in the euro pound, which is really why we're sort of staying away from it for now. We've had a structural failure in this trade yesterday, which is why we booked in profit around these lower levels, and we're continuing to get structural failures to the upside. So actually, this is turning into being quite a strong reversal signal now. And you would have to expect short term some further upside. But will we get a narrowing of price action? That's looking to be the case. So we'd expect prices to be pushing up, perhaps up to these levels in here, the 154.50 level. So the euro yen, as you can see, we could be seeing a structural failure trade to the upside. So again, we don't really have enough information just yet. When we trade, we want to try and stack the odds in our favor as best we possibly can.
10 minutes until we get the weekly initial jobless claims. We're looking for it to tick down to 390,000 on a prior 411,000. The range 320 to 460,000. For the continuing, we're looking for 3.382 million on a prior 3.39 million.
Okay.
The range 3.3.
Okay, I'll come back to that in a second. That's just our squawk service. So we've got potentially a double bottom and a reversal signal, probably above 1790, something like that. Crude oil, we're already seeing a little bit of softening. We're seeing a little bit of negative price action. What we would like to do is to see this correct down to these levels, and then see the next leg to the upside, and maybe that will tie in with awaiting central banks, the OPEC. So it's maybe just a little bit of patience required today, really, more than anything. Okay, so we've got the the unemployment numbers in about 9 minutes. So if you could just give me 1 minute, I'll be back very shortly. Just bear with me just a moment. Okay, apologies for that. Bit of a hectic day today for a number of reasons, unfortunately. So what we're seeing is a little bit of a pullback in crude oil, and we're looking at a bit of certainly a weakening dollar, and nothing really going on with the S&P. Let's have a look at the other indice markets. Mildly bearish, mildly positive, mildly bearish. So I mean, the Nikkei mildly bearish as well. So we've just got a mixed bag in these markets. So it's important perhaps not to wait for the clarity. Almost, it's so easy to just keep pushing the button, and it's probably not the greatest of strategies, irrespective of what your approach is. Okay, if you're a scalper, then you can identify slightly different opportunities, I guess. But timing is quite important, because sometimes people have a really good strategy, but they're far too active, or they're active at times perhaps that the opportunities are not really there to any great extent. And this could be one of these situations. Will we get a flush down in Bitcoin, and will it be the short-term end of Bitcoin in many respects, where anyone in Bitcoin or buying Bitcoin is really scared of this 30,000 level? Will prices break through? We shall certainly find out pretty soon. Okay, so we'll get this update ready. We'll see how this market reacts to the unemployment news, and just bear in mind, really, tomorrow we have what we'll do is we'll just take a bit more of a focused look on the euro dollar. We'll have a look at it on the smaller time frames, see where the reaction lies. So there's your dollar weakness over the course of the European trading session anyway. We'll keep an eye on crude oil, and just want to put up the S&P 500 really here.
We're just moving into 30 seconds now till this data.
Just to keep just an eye on. In fact, we can have a look at this on smaller time frames also. So let's see how the dollar reacts, and how the
10 seconds.
The S&P reacts to this news event.
364,000 for the initial jobless claims. We're
Okay.
continuing coming in at 3.469 million. So just to recap that with revisions, US weekly jobless claims at 364,000 last week, with the prior revised 415 from 411,000. They're continuing coming in at 3.469 million, with the prior revised 3.413 million from 3.39 million.
Okay, so we're seeing a slightly better unemployment claims number than what was expected. The markets were very much expecting and pricing in 388,000 unemployment claims, but we actually saw 364. So 20,000. The jobs picture is 20,000 people better off than was expected. So that's really what the Fed and the government are wanting. Obviously, people to be able to go back to work, and if they're not claiming, then they're likely to be in better positions. So what we're seeing is the dollar strengthen in line with that event slightly, and the S&P is just slightly weakening. So maybe if we look at it on the last 2 minutes, we've seen a very small amount of dollar strength. So the S&P is strengthening slightly. So there's still a bit of a question mark over this particular bit of price action. Okay. Marginally bullish price action for the euro dollar, sideways moving markets as far as the S&P is concerned, and we would look to get in on the pullback. So this is kind of pullback territory. So we'd want to see prices just roll back over. That 74.17 is quite an important level, so keep an eye out for that one. This is either a market which will flush to the downside, or we'll pick up pace and we'll break to the upside. So it'll be a double bottom, strong reversal then to the upside, or we could be in another period of consolidation. So I suppose the third outcome is that we failed to break higher, we failed to break lower, and it just starts to drift. So you can always buy, sell, or do nothing. This is your buy trade. That's your buy trade. This is your sell trade. And this is your do nothing trade, the sideways moving pattern. So we need a little bit more. We need a little bit more in the euro dollar. We'll certainly like just keep an eye out for that 74.17. Not really much is happening with the S&P, so we'll have one quick flick through, see if there's any markets that are kind of standing out in terms of good tradable opportunities. So the euro dollar, not quite. Similar situation for the pound dollar just now. This is a momentum trade for sure. You can see how it's breaking above these levels, and we're continuing to the upside. I suppose getting in on yesterday's this indecision candlestick at these lower levels and looking to get in around the 110.77 is probably the trade. We're obviously a bit late on that now. Strong reversal in the dollar Swiss. Dollar CAD is just trading inside the previous day highs and lows. We'd like the flush trade to the downside, but it would be below the 74.77 for the Aussie dollar. Same situation really, although we've got a little bit more positivity to the upside for this market. So need some more information. I just don't really like the price action in the euro pound just yet. The pound yen and the euro are pretty much getting close to these little structural failure trades. The euro yen is probably the better opportunity if we continue to see this euro strength across the board. Gold, again, we need some more information, and maybe we'll get an 80 pip pullback in crude oil. So that will be something that would be probably the highest probability trade out there at the moment, would be a buy trade at 74.17 in crude oil. Stock markets, not really much to work with. A lack of momentum, direction, volatility, not great opportunities. So really, I'm going to leave you with the crude oil market. So I mean, we could get just a very, very quick flush trade to the downside. And in terms of stop loss, I mean, this is by far the safest stop loss. I suppose there's a higher one just in here, 7,300. So if you're getting in at 74.17, you'd probably need a stop loss below the 7,300. So it'd be like $1.20 or something like that in terms of a stop loss. And you'd be looking for prices to be up around $76, $77, somewhere in and around that. Okay, so that's really the only trade we're going to really focus on, probably for the duration of the afternoon. We will see how these things go. We will keep an eye out and see if the picture begins to change. But if it doesn't change, then it very well maybe just be focusing on crude oil. Okay, so listen, on that, we do need to switch over to our other trading room. So I'm going to let you guys go. Thank you very much, as always, for joining us. And we'll be back again tomorrow at 12 noon for more trading. So from everyone here at the live trade room, thanks so much, and we'll speak to you soon. Bye for now.